Hey everyone, it's Mark Ferguson with Investor More. We're back with another real estate video. Today I'm going to talk about the housing market and what's happened over the last month or two, and if we should be worried or scared or keep doing business as normal based on the statistics that I am seeing and that we're seeing in different parts of the country. So as always, we love the comments, love the shares, love the likes, keep those coming. And I've done a number of these videos over the last few years, so if you want to go back and check those out, it's under my playlist, real estate advice videos. I've done a number of videos on if a housing crash is coming or not, and what the current real estate market's like, all kinds of different videos. And my opinion over the last few years, and longer than that, is a housing crash is not coming. And I went through the last housing crash. I made a ton of money in the last housing crash selling foreclosures. It was way easier for me to buy investment properties, which I still do now. And it would be way easier to buy properties if prices were lower. Unfortunately, for people who are looking for lower prices, I just don't think that's happening. But at the same time, I don't think people should be wishing for a housing crash either, because a lot of people own houses, they own real estate. The number one investment for the vast majority of Americans is the house they live in. And if you're rooting for a housing crash, that would hurt the vast majority of Americans. So we're going to look at some stats here, and then I'm going to also show you some other local stats as well. These are more national stats on this page, and go over what I'm seeing, if there's any big changes, and a few other things in different markets that might be worrisome to some people. But remember, every market's different, and nobody has a crystal ball, including me. I could be completely wrong, but this is just what I see based on trends in my experience over the last 20 years or so, and going through the last crash and the last run up, and what we've been seeing. All right, so I am right now in my insider's course. So I have this dashboard I created for people in this. It's just like what do we charge? $9 to $20 a month, depending on the deal you're in. And it comes with all kinds of different stuff. Some training, newsletters, a little podcast I do, and some calculators, and then this cool dashboard here, which we keep improving and keep changing. So I want to show kind of real-time stats of what's happening in the market right now. And these are national prices. I'll show you some stuff here in a little bit on Colorado prices, and maybe a few other interesting charts I saw across the country as well. Now, the cool thing about these little charts here, this is housing prices right now. So the median price in the United States is, we can zoom in, zoom out, and really they're pretty interactive. So we can scroll this way and see what has happened. So a lot of people, see this giant run up here and just say it's not sustainable, it can't happen, it's just impossible. And they go back and look at this low, climb right here. Well, that's how charts work. The higher prices get, and you have the same percentage change, it's gonna look way higher than before when prices were lower. So if we kind of zoom in, even to the 70s, let's see here, you've got the same basic flow of going really high up when you zoom into that little area and look at it in just that same kind of time frame as you did before. The 60s had some high prices, a little bit of drop. In the 70s, exploded with prices tripling, all while we had record inflation, record increases in interest rates, 2 recessions, 2 oil crises, price fixing, not price fixing, but, what was it? Cost fixing. They're fixing the cost of things to try and stop inflation. All kinds of crazy stuff. So that's one decade I always like to look at when looking at real estate prices. And here we'll go back to where we were if I can, just because it seems to be kind of the most similar to what we have right now. But you can see, yes, that looks crazy. But again, if we zoom in to the last 10 years or so, you can see it's actually a lot flatter increase than the 70s had for most of it. Then we've had a sharp increase here. And you can see, if we zoom in even more, right, over the last couple of years, we've got a tiny little decline in prices. Now, if you pay attention to the media and social media and different things, you would think our market has completely crashed already based on what you've heard from some people. But you can see we've gone from a median price of $453 to a median price of $448. A very, very tiny drop. And something else that's more important to see is we've had bigger drops the last few years every couple months. That's just how real estate goes. Real estate does not go in a straight line. It kind of jumps all over the place, and that's just how it works. So really to see a trend of price decreases or changes, I mean, we've got to wait almost 6 months to really see a steady trend of what's happening. And then we can see if prices really are decreasing, if they're staying the same or not. But so far, we are not seeing any craziness. That is from May. We don't have the June numbers on this chart yet. I'm not sure how far back it is, but we do have these automatically updated as soon as the sources are updated here. So that's interesting to see. Yes, prices, they could slow down, which is not surprising based on how fast they've been going up. And if they do slow down, that doesn't mean they're going to go down much. It just means they might stop going up as high as they have been. And that's pretty much what Freddie Mac, Redfin, Realtor.com, all the major housing publications and predictors have all kind of said the same thing. Yes, real estate prices could slow down, but they don't see a major decrease or any decrease at all in actual prices. They see a decrease in the rate of going up, but not an actual decrease. So we'll see what happens here. But in my market, we haven't seen much decrease at all. Well, no decrease, and I'll show you that here too. All right, something else that is very interesting. Over here, we have mortgage rates. So we can see the gigantic high that we had in the early 80s, and then what I was talking about here in the 70s, this just increases. I think this doesn't go back all the way, but it was down around 5, I believe, in the late 60s, early 70s, and it just jumped up to 9, over 10, almost 11 at the end of the 70s when we had that massive increase, and then we had a huge increase there in rates as well. And if we go back here to prices, you can see even with that spike to almost 19% with interest rates in 1981, there was no real decline in prices, right? Maybe like almost none, like a little tiny bit right there, a little. But again, we see those up and downs all the time. And so there's kind of a misconception that interest rates always cause prices to go down. And that's not true. We've had multiple instances of high interest rates going up, and real estate prices just keep going up too. And the thing is that real estate prices are usually based on the cost to build, the cost to produce, not what people can afford. That's how most products work. If you can't afford a product, the price doesn't just automatically go down. What happens is usually they stop making that product. They stop building houses, they stop making a certain product if you can't afford it, and then they just make as many as people can afford to buy. So they don't just automatically go down. The sales go down. The amount of product goes down, but not the prices. Unless you're in a massive surplus, you have massive oversupply, which is what happened in 2006 to 7 to 8 here. We had a massive oversupply of properties, then prices dropped down. But we don't have that now. We have the opposite of undersupply. But you can see here rates still pretty low historically until you go back to 2008. They were higher. All of this was even during the real estate crash, up to the real estate crash when prices were going crazy, rates were still higher. And something else that's interesting too, everyone got spoiled right here. It spoiled everybody. But look at that. We've had a drop recently. Rates have gone down a little bit, and we're seeing that from a number of sources that rates have dropped a little bit, and we'll see if that continues to happen or if the Fed increases their basis points again. But rates are not just skyrocketing up to 10 like some predicted. They've started to come down some. So we'll see what happens there with inflation and different things, and we have some other things to look at in regards to that. All right, we keep going down here. Like I said, we added some more stuff here. Let me scroll way out here on this one. A lot of people say new construction is out of control. They're building too much. Not really true. Single family permits. These are a number of single family permits that are being issued. You can see, not real sure exactly where this average is, but probably somewhere around in there. We might be slightly above average in single family home permits after record low amounts for years. And you can see how many there were in 2005 before the bottom dropped out. Massive amounts of houses being built, and we're still not even close to that. And again, something else that happens with higher interest rates, building tends to decrease. So you can see we had this kind of steady climb, COVID craziness, still had a steady climb, drop, climb, then another drop. And that's almost what you see with high interest rates is drops in building, less building, which means less supply, which actually can push prices up, not down. So we'll see what happens there. And then this is the other interesting thing here is completed new builds. So a lot of times you'll hear the term, oh, there's so many houses under construction. Well, under construction means houses are currently being built, but that's not super indicative of the market because it takes so long to build houses. This is how many houses are actually being built and finished. And this isn't just single family, this is all new completed builds. And you can see here, this average, somewhere in here, right? It's kind of hard to say with all these ups and downs. We're right at average, maybe after record low building. We're barely at average for completed. So there just simply aren't enough houses right now. And a lot of that's because there was no building and we just never caught up, right? Estimates say we're 3 to 5 million houses short of current demand or what is needed. And we're building like 1.5 to 1.6 million houses a year. And that's normal, what we normally build. So we'd have to build like 3 million houses a year to even come close to catching up to that demand in like 3 or 4 years. And instead we're not. We're just falling farther and farther behind. So this would have to shoot up for us to make up for this craziness down here that happened. And then people say, well, there's tons of houses. They aren't going away. Well, they are. There's lots of houses torn down. There's lots of houses abandoned. There's houses turned into commercial properties. And also, people move around. People change locations. In some areas that have lots of houses, maybe like Ohio or Detroit, don't have the people to support those houses. So while there's enough houses in Ohio, there's not enough in California or Colorado. And the people aren't there in Ohio to support those houses. So just because there's enough houses doesn't mean they're in the right places, right? You need those houses in the right spots. And that's why you always see new building and new houses coming up because people are moving, new places get hot, people want to go there. And then if they aren't building enough houses, then prices just go up and up and up. All right, we have some other things to look at. Let's see. Vacant houses, I like to look at this because people always say there's so many vacant houses and enough for everybody. Actually, except for this crazy COVID bump there, we're just over 15 million vacant houses, with bumped up a tiny bit, but overall, that's about the least amount we've had in the last 20 years. And you can see how many we had in the housing crash, and we've been just working through those vacant houses and fixing them up and getting them back on the market. And there's always going to be vacant houses, right? There's always going to be people moving, which count as vacant houses, people fixing up houses, which count as vacant houses. Those houses we talked about in different areas where people don't want to live. Some people have vacation houses. So there will always be vacant houses. Just because there's 15 million vacant houses doesn't mean there's a surplus of homes for everybody to live in. All right, and this is a really interesting one we just added, days on market. So what this is how many days on average it takes to sell a house. And we go back to 2016, July, and you can see the seasonality of this jumps all over the place. And this is why it's important to look at some of these stats with a grain of salt too. A lot of times you'll hear people say, oh, inventory increased by 20% over last month, or days on market increased by 15% last month, or price decreases increased by 10% last month. Well, if you look at real estate charts, a lot of them look like this with crazy differences in the seasonality. So I could say, hey, days on market increased by 20% in October of 2017. And it did over, September or whatever it was, 20%, maybe I'm wrong. But if you look back at this year over here, it's exactly the same, maybe even lower. So you really need to look at the full chart, like 5 years of information, to actually see if that change is significant, if it's historical, if it's got a big difference from what's happened in the past, not just from the month. And our society now is full of headline catching garbage, to be honest, that doesn't mean anything because people take it out of context or they don't use enough context around it to know what's really happening. Right here, that's our days on market increase. We went from 30.81 to 31.69. An increase of less than 1 day. After all this talk of price decreases, houses sitting on the market, different stuff in the media, that's the difference right there. That 1 day. compared to what was here, last year. Yeah, that was the bottom last year, which, look, there's a peak every year pretty much at that same time. That's a weird drop there. That was COVID. That's the weird COVID drop that happens in every chart. Again, this time of year, every year, May, June, July, we have this drop. So we had the same exact drop, and now we have the same increase. It's happening every year as well, pretty much. Now, the interesting thing to see will be, does it jump back up here in the winter? Does it stay lower? What does it do? Again, we have to see months of data to see, is it different from before? Is it changing? Because we are so far lower than before. This used to be 60 days on the market, 61 in 2017. Now we're at 30. It just shows how crazy our real estate market is and how many more listings and properties and inventory we need to have to get back just to normal, let alone a point of surplus and oversupply just to get back to normal. It would take so much property in the market. All right, this is another new one we added, which I love too. Mortgage delinquencies. That's a good one, right? So we can see here, kind of the average has always been right around 2%. We dropped real low here in 04, 05. And that's kind of, maybe because people could always sell their house if they got below it. And then boom, housing crash happens, 11%, craziness. Then we saw this drops. Still had some delinquencies in here, as you can see. But overall, 19, we had a low of 2.32, raised up to almost 3, not quite, after COVID, dropped back down again, and it's dropped back down again. So there's a lot of talk. Foreclosures are increasing. People are losing their homes. It's not really happening. We're actually seeing decreases in delinquency rates. We've seen a teensy tiny increase in foreclosures. I'll show you here in a second. But that's pretty much because there was a moratorium and foreclosures were stopped for like 2 years after COVID, and you couldn't do them. And then they're allowed again, and now those are happening, and we'll show you that uptick. But this is something interesting to look at as well to see if our market is really changing. Is this changing from that kind of average of 2%, or is it going to continue to go down? Okay, now I'm on my Instagram page because I know this is where I have that chart that is real easy to see. There's the Invest for More Instagram page. Where do I have that chart? I feel like it's up here farther. There it is. It was down there farther. Sorry. All right. This is that increase in foreclosures I was talking about. You can see here, that says 2005. If you can't see it, we saw all the foreclosures increase. That's about 550,000 foreclosures. We saw the decrease as the market recovered. Moving along, COVID hits, boom. COVID hits dropped because we had the moratorium. This is Q1 2022. You can see that's the increase they're talking about in foreclosures. After the moratorium was lifted, we've got slightly more foreclosures, but still not even back to what it was before COVID. When we had a pretty strong and solid real estate market, we're not even back there. The foreclosures are pretty much non-existent still. There'd have to be massive increases in delinquency rates to get back foreclosures, and we aren't seeing that as we just showed you before. Okay, now I'm on my local MLS data, and I have not looked at this recently. I've looked at it like 2 or 3 weeks ago. So we'll see if it changed significantly, right? We'll see what happened. We'll just go to my town here, which is Greeley. Click on that. We'll get rid of the entire MLS. And we can see what data range. So let's go 5 years ago. So this right here is the median price from 2017 to now. So you can see chugging along, up, up. Slight decrease in the last month. Now, a lot of people say, oh, prices are decreasing, time to freak out. Well, look, you go back here, you see those all over as prices are increasing. We see ups and downs. It's not a straight flat line. Now, if it keeps doing this, sure, then we could see some trends start to talk about prices decreasing. However, 1 month is not enough to freak out about. And we're going to show you something else, which is interesting as well here. If I can find it. Oh, here it is. This is the price per square foot So this also, you can see prices decrease when a builder comes on and starts building a bunch of small houses, or you can see them increase when a bunch of really big, expensive houses are sold in certain areas. So this is kind of a price per square foot, which gives you a better idea of what might be happening. And you can see here, increase in February, decrease in March, increased in May. So again, up and down, but again, our price per square foot is still about the same as it was in January, up, down, up, but much higher than last year. That keeps increasing. And if you want to see something crazy, we'll max this out. There you go. All the way to 2012, where it's $62 a square foot, 60 in February, and now we're at $186 a square foot. And if we do that for prices as well, which is, why can't I see? I have all my different stuff. Sale price right there. There we can see 440 compared to 125, 145. But again, this is what I'm talking about. Every month, every year, there's ups and downs along this market. So it's hard to say something's happening just with 1 month of difference. Months supply, this tells us how many months properties have been, of properties are available, how many months it would take to sell all of them. You can see what it was like back here. Crazy. And then that's just been decreasing. We'll take this back to 5 years to kind of give you an idea of what this is like. And most people say normal is 3 to 6 months, and we've been under 1.5 months for 5 years. And we creeped up over 1 month here. So the sky is falling, the world is ending. We're at 1.1 months of supply. So again, we'll see what the trends say. But that's got to increase to like up here more to get even to a normal market, let alone a surplus market. Some other interesting stuff we can see, percent of original list price to sale price. So you can see for a long time is right about 100, just below, just above. Then boom, we jumped up to above list price on everything, steadied out a little bit, boom, back up, still averaging 102.2% of list price to sales price, meaning people are still doing above list price offers on most houses that are selling. Still a crazy market out there. We didn't do days on market. Again, days on market, just like we saw with the national average, we don't have quite the seasonality spikes, but still a little bit of that. And you can see 34 days, still very, very low compared to even what normal is, which is probably 90 to 180 days. Closed sales, that's a number of sales, still no real big decrease there at all. We're still selling houses. Last year, June, we had 184. This year in June, 202. We sold more houses in June of 2022 than we did in June of 2021. And so we're not even seeing a decrease in sales here either. Homes under contract, nothing crazy happening there. Homes for sale, these are active properties being listed, nothing crazy there. A slight increase over last year of homes for listed. But if you go back to normal years, about the same. Again, nothing crazy there either. So really, are the showings decreasing? Maybe a little bit. We have some decrease in showings, but again, we had those same decreases in 2020, 2019. Still a really strong real estate market. So overall, what we're seeing is, could there be a slight slowdown? There could be a slight slowdown in the market. But when we saw those massive price increases, and we go up here, that we've had, right? A slowdown is kind of expected at some point, whether the market is changing or not, or interest rates are changing or not. You kind of expected at some point this to slow down, that increase. And a slowdown doesn't mean a drop or a crash. It literally just means instead of going up like that, we're going up like that kind of thing. And that's kind of what I expect. I don't expect a massive crash. I don't expect things to change drastically. I kind of see more of a leveling out. And that's kind of what a lot of the other major players are predicting as well. We'll see what the Fed does with rates. We'll see what happens with inflation and different things. We had some more. Oh, I missed some of my trends here. This is inflation here. We'll see how what new inflation numbers come in at. You can see it's kind of high, but if we scroll back out, historically, there was a lot of times it had much higher inflation, much higher. The consumer price index, again, it's been going up. That's kind of a judge of inflation as well. This recession probability chart, I'm not sure exactly how that works, but it's on here. Here's the federal funds rate, which shows us what the federal funds rate is. Again, I think they meet July 27th. So if they increase that again, yeah, it could go higher, but it's still nothing crazy. So much higher before in the past. And then we've got some of these other charts here too. S&P 500, which basically measures the stock market. We had a big drop, but again, it's not just in a fallout deep dive. It's starting to come back too. Bitcoin, let's scroll out here. It had a big drop. It's flattening out a little bit. It's not just continuing to free fall. Lumber, I wish it would have a free fall for our construction costs. It dropped down a bunch. It's kind of in here. Hopefully it levels out somewhere along there and isn't too crazy. And this one, this is a good one too. This says oil, we need to fix that. This is gas prices. These are gas prices, and you can kind of see what they did before. And I'm wondering if they're adjusted for inflation or not. I'm not sure. But you can see here, they shot up like crazy. They're starting to fall a little bit too. Really good news if gas prices keep falling for everybody, for inflation, for just the whole economy. That'd be great. So, and finally gold, which is kind of a safe place to park your money, but nothing too exciting for me there. You can see it's dropping just a little bit here. So the sky isn't really falling. The real estate market doesn't seem to be crashing too much. Things are okay as far as I'm concerned. We'll keep watching this. We'll keep seeing what happens. I'll keep having updates on these numbers and see if they change significantly. But in my experience in my real estate market in northern Colorado where I am, tons of buyers, tons of people still buying. Most people say the same thing across the country. There's a few areas of the country where I've heard it's gotten a little bit crazy, a lot of listings coming up. And those were areas kind of like Phoenix, Idaho. I'm trying to think of where some of the other ones were, but where the market just went absolutely bonkers and crazy. Those are starting to level out a little faster than others. And other markets are going just as strong as they were before. So I've also had some people tell me, hey, prices dropped 15% in certain towns in California. And I look at that data and it shows prices still going up. And I talk to those people like, well, yeah, they haven't gone down yet, but they're going to go down, I promise you. So make sure you really look at that data and don't just take people's word for it anymore. I know it sucks we have to do that, but a lot of bad information out there, a lot of people saying things are happening that aren't happening. But when we look at the data, really dive into it, that gives us a better idea on if things are really changing or not. And so far, after months of having high interest rates and things, shoot up here, not a lot has changed. Maybe a slight leveling off, but not a whole lot of craziness going on in the real estate market yet. All right, that's all I've got for this video. Thank you so much for watching. Love to hear what you think. Love the like, love the shares, love the comments. Keep those coming. We'll be back with more videos talking about the market and, of course, showing my investment properties, my flips, my rentals, commercial properties, stores, all those things as well. Thank you so much. We'll be back soon.